show. Let me start by stating that I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Okay? Today is, or the time that this video is being made is February 25, 2022. And this video is about metamaterials and metamaterials Torchlight preferred shares. Stock symbol MMAT and MMTLP. And title is No Shares to Buy. So let me start off, for those who are unaware, is to give a quick overview of what these two stocks are. MMAT makes next generation nanostructures, which are called metamaterials, right? They do tiny structures at the micron level across large sheets of glass and things like that, right? MMTLP is an oil and gas spin-out, and there's a special dividend associated with that. Essentially, the dividend from the sale of oil and gas assets are to be distributed to MMTLP shareholders. So the two are two very different shares, but they're basically all from the same company. And that's, I'll explain how that works later, okay? So let's look at some price action. This is metamaterials in the last 5 days or so. As we can see, there was some uncertainty in the markets in general, and the stock dipped dramatically on the 24th, after which it started recovering dramatically as well too. And the reason for that is the Ukraine war, of course, right? This is the 1 year chart. As we can see, metamaterials has been dropping for about a year or so. It had a high of about $21.95 equivalent share price or so, but right now it's around $1.85 or so, and it looks to be going upwards in that last in that last few weeks. So let's look at MMTLP. For the last 5 days or so, it's been relatively flat, apart from a severe sell-off on the 24th and subsequent recovery. It's ended the week fairly flat overall in general, let's say. For the lifetime of trading of MMTLP, which is not very long, it's been relatively stable, and in the last month or so, it's gone up significantly to about $1.80 or so, like stair-stepped. And let's see if it stays stair-stepped or if it keeps heading upward even more. MMTLP is dependent upon the price of oil, and if we look at the price of oil, this is West Texas Intermediate. We see the price of oil is ended the week relatively flat, but it did spike up to about $100 a share on war news, of course. If we look back about a year, we see the price of oil has been steadily rising over time. So oil prices started, much significantly lower, almost at half the price, and now it's about twice as high as it started out, almost. The big news of the week, of course, is the Ukraine war, and that Russia's invaded the Ukraine, and that's caused a lot of uncertainty in the market, and people weren't sure what's going on with that, whether the U.S. will get involved, how involved we'll get, etc. Right? But overall, things seem to be stable. Well, things seem to be, things seem to be made clearer as the week has gone by in some ways. I really prefer to talk about business and finance rather than war, and we see that in the Wall Street Journal, Citadel is paring back $2 billion in Melvin investment. That is quite interesting. Could it be that Citadel's having a liquidity problem? Could it be that Melvin is going to have a liquidity problem or having a liquidity problem? Could other short hedge funds, could other smaller players like boutique market players also be having issues? It's hard to say. Be nice to find out. Be very nice to find out. So let's see. Let us see. So the SEC has announced some new information. They've got some new regulation that they'd like to propose. This came out just on Friday, and they'd like to get more transparency among short sellers. Okay, you can see what the proposed regulations are on the SEC website, and essentially they're saying that they want monthly reporting of major short positions. That's good. They also want to know when, if you're making a major purchase and you already have a short position, you got to mark your purchase as buy to cover, because you're not really buying for the purpose of buying. You're buying because you have a short position and you'd like to cover that short position, right? So buy to cover, just mark it off that way. With that said, let's have a look at what the short position for metamaterials looks like, or the official short position at the very least. Okay, so this is what's reported on NASDAQ. I choose to make a chart out of it because it's just, I see things better in graphs than on raw numbers. So, in red, we see what the short interest is. Okay, each bar represents a period of about a half a month or 2 weeks. And we see that the last time I did this was about a month ago or so. So we have 2 additional bars. So we see that the short interest is ending around 37 million shares. Previously, in the last period, it was around 40 million shares. Those are significant numbers of shares short. Let me state that again. Those are significant numbers of shares short. There aren't that many shares of metamaterials out there. And 40 million shares, 37 million shares, that's a fairly large short interest is what I'm saying. In any case, if we look at what's been happening, I like to make a difference of what the short interest is from the previous period. So I created my own column. I call it diff, and it's shown in white. If things are below 0, that means there's some short covering going on. If things are above, that means that there's additional shorts piling on. In general, we see that shorts have been piling on, and there's been a small amount of short covering in the last week, right? In the last period, right? A small amount of short covering, not very much at all. Okay, the days to cover has actually increased. Let me repeat that. The days to cover has increased, and the reason for that is that the volume has actually decreased, right? The average volume has gone down. It went from 6.6 million basically down to 5 million. So it went down by about 1.6 million shares in terms of average daily volume. As a result, the days to cover has increased, and it's up around, 7.6 days. That's significant. This is the FTDs, the failures to deliver. This information is from the SEC website. I made a video about how you can go to the SEC website yourself, grab the FTD data, process it, and essentially that's what I did here. Right? So in red, we see the FTD data, and they tend to be behind more on their data than NASDAQ shorts. So, yeah. So anyway, so the FTD data for it. So in the yellow box, we see FTD data from January up to January 14th, and in the red box, we see it from January 18th all the way up to the end of January 31st. We see that there's a large amount of FTD data in the red box. And if we look at that and compare that to the price of metamaterials in green, which is below, we see the price has dropped significantly during that amount of large failures to deliver that were occurring. This implies that there was a lot of naked shorting going on there, right? Again, let me state that. This implies there was a lot of naked shorting. That means that people were not selling their shares. That means that fake shares were being injected into the market in the name of liquidity, and those were being sold as though they were real shares, hoping to cover back with real shares, or at least a marker to real shares at some point later. Okay, so that's what was going on. People are not selling their MMAT shares. That's the way I look at it. Now, this was an interesting video. I mean, this was an interesting tweet of a clipping of a video that was done by Houston Wade in the middle of the week. Let's watch the video and see what he says.
Oi, Houston, I'm from Europe and already have metamaterial shares, but MMTLP shares are not available here. What price are you guessing for metamaterial shares after MMTLP dividend? Thanks in advance. Love your streams. Triple digits, $100 a share if it squeezes. That's total speculation on my part, but you know, something at or above what Newegg had seems really. Newegg went to 77. I think that's very doable. Especially if the dividend for the MMTLP shares are as big as I think they are, it will mean a whole bunch of hedge funds can't pay on it, and there's gonna be forced recalls, and the recalls of those shares are gonna force the purchase of metamaterial shares. And metamaterial shares have a huge locked up of the total issuance of shares. The float is pretty small. They have a lot of institutional ownership and a lot of insider ownership, and the float's actually pretty tiny. So it could mean a big high price spike if that's the case.
Thank you, Houston, for that insight. I first found out about metamaterial shares through a Houston Wade video, and I later on saw a Roller Pigeons video about metamaterials and MMTLP, and I did the math, and I was convinced at that point that it was a real deal, right? So anyway, that's what Houston's saying. He's saying $100 per share of MMAT from the dividend point, and that's coming up in March sometime, we believe, right? So somebody asked a question. Hey, what's going on here? You know, I wanted to. They essentially asked the question, what's the link between MMTLP and MMAT? Aren't they essentially two entirely different things, right? So I wanted to thank that person for their question because it was insightful. I think it was a good question, but unfortunately they deleted their tweets, so I can't thank them. I made a response. I said the link is George Palikaras. My response was actually wrong in that it did not talk about what Houston was talking about. It talked about something else. We'll go over my response a little bit later. But here's what Houston was talking about, okay? Basically, there was a merger. Pre-merger, there were Torchlight shares and MMAX shares. They merged in, and after the merger, there was metamaterial shares, MMAT, and Series A preferred shares, right? There were Torchlight. The Series A preferred shares came from the Torchlight side, of course, right? Prior to the merger, there were shorts. There were in terms of Torchlight shorts, and there was metamaterial shorts. Well, after the merger, you just had metamaterial shorts. So those Series A preferred shares, what happened to that? You know, how could those be shorted appropriately? And what happened? So let's see. So the torch shorts result in synthetic torch shares. The metamaterial shorts result in synthetic MMAX shares. The synthetic TRCH shares result in synthetic MMATs, but they also result in a synthetic Series A preferred share. The synthetic MMAX shares just result in synthetic MMAT shares, right? So at the end of the day, you got the synthetic MMAT shares, synthetic Series A preferred shares, MMAT shares, and Series A preferred shares, right? That's what you'll have at the end of the day. However, we know that it's you know, you can't get a hold of these Series A preferred shares. So someone came along and they made the stock symbol MMTLP, and they associated it with the Series A preferred shares. And so the Series A preferred shares became MMTLP shares. So now, at the end of the day, where we're at is that today we have MMAT shares, MMTLP shares, synthetic MMAT shares, and synthetic MMTLP shares. So what Houston is talking about is that when the dividend happens, the dividend will wipe out the people who have created the synthetic MMTLP shares because they will have to pay out a large dividend. that will result in them getting a margin call. Okay, but it doesn't end there, because those guys, they have synthetic MMTLP shares because they shorted Torchlight, which means that they also so that those original Torch shares and what they represent would be wiped out, and that means that the synthetic MMAT shares would also be forced to cover as a result, right? So the margin call that happens from the synthetic MMTLP shares because of a high price dividend results in the same people having to close their position in MMAT. And that's basically what Houston was talking about. And that is why he thought that there would be a short squeeze. However, the situation is a bit worse than that. Since that time of just synthetic Torch people, there's also synthetic MMAT people. Not only are there synthetic MMAT people, there are additional synthetic MMAT people. And those people will also be suffering because the price of MMAT is going up. So the synthetic MMAT guys will get wiped out. They'll get margin called. And that means that even more shares will get wiped, will be forced to be bought. And there just aren't enough shares out there. So, but wait, there's more stuff. Remember when I said my response was wrong? Well, it just wasn't what Houston Wade was talking about. It wasn't actually wrong. It was about what was really going on. So my response was about, let me go back to what I said. I said that the link is George Palikaras, CEO of MMAT. Right? MMTLP dividends are paid out by Metamaterials. George Palikaras is ultimately the source of information for MMTLP updates. GP has publicly stated that he hopes some people might reinvest their dividend back into MMAT. Where am I coming up with this crap? I mean, why did I even say that? Well, I said that because I heard a talk from the Italian investor group. And this, there's a partial recording that's on the internet that took place on 5/13/21, in which George Palikaras was talking. And essentially, here's what he said.
The assets that Torchlight has even more valuable. So if you announce a dividend today, you're shooting yourself in the foot, as they say. I believe that the dividend will be very exciting for the Torchlight shareholders, and my hope is that they'll take it and do whatever they want with it and maybe buy some additional MMAT stock on the future on the NASDAQ. That's my hope, and that's why we did not want to touch the dividend, because we on the meta side could not even predict the price of oil 6 months ago, or where this Biden administration would create potentially additional reasons for the assets to be more valuable.
And for you,
the conclusion is that it's a preferred share for a reason. It's not priced. And in order for the shorts to deliver this, they have to own the stock. They cannot borrow the stock. They cannot short the stock. They have to own the stock to participate in the dividend, and so does any other normal investor. And as a result, because of the potential is, if you look at the statistics, it could be $1 to more than $20 according to the analysis. It's difficult to predict where it's gonna end up.
It's difficult to predict where it's going to end up. So, let's see what he means by that. So, when George was talking about this, the price of oil was a bit lower. It was around the $65 price point. So, he was talking about, possible $20 dividend. So he's way down there. The time he did the analysis, maybe the price of oil was around $50. I don't know. So, if that's the case, and the price of oil is now $92. What does that do? That basically means it gets moved all the way out to the right. And we're looking somewhere between $64 to $74 a share of dividends, depending on, where the price of oil is. Split that in half and say it's about $68, $65 per share. $65 per share would not be bad. I'd be quite happy with that. So that was George Palikaras' quote. Maybe buy some additional MMAT stock on the NASDAQ. That's my hope. So I'm hoping that a lot of people have heard that message, and they might do that. You never know. So what happens if a lot of people do that? Right? So this is a quick calculation that we did. There were 281 million shares of MMAT issued. Insiders have 60 million shares. Institutions have 63 million shares. The shares available to buy, that means the float, is about 157 million shares. Let's say it's 160 million shares. Now, we also know that of the 160 million shares, there's about 40 million shares that are short. 40 million shares are short. So, what's going to happen if a bunch of people buy? Well, if a bunch of people buy, and they take a quarter of the amount of money that they get from their, MMTLP dividend, and they reinvest that back in, that's about $1.28 billion going back into metamaterials. And that means that you'll wind up buying about 747 million shares if the price is $1.72. There are not 747 million shares available. There's only 157 million shares available. So you can guess what that'll do to the price, right? That's if a quarter of the money from the MMTLP dividend comes back, goes back into MMAT. Suppose only a 1/16 of that money goes back into MMAT. A 1/16, 6.5%, 6.25%, right? That means about 186 million shares would get bought. And there's only 157 million shares available in the float. And if people don't sell that, that's 186 million shares that want to be bought. And there's no source for that. And there's already 40 million shares short from the various shorts. So there ain't shares available. That's the way I'm looking at it. Let's take a look at it from a slightly different perspective, right? If a bunch of metamaterials shareholders, we don't know how many, we don't know if metamaterials shareholders have MMTLP or not, right? It's hard to say. But let's say that they have about $1,000 worth of shares, right? And that they bought it at about $1.80 or so. That means that they have about 550 shares each. Okay? And if they get a $65 dividend, that means that they'll get about $36,000 back. If they reinvest 10% of that, that means they're going to reinvest about $3,600 back. Okay? And if they're able to buy back MMAT at, say, $1.72, that means they're going to be buying back almost 2,100 shares. And that means that they would buy back in total about 357 million shares. But there's only 157 million shares in the float. And the float is what's held by retail. And if retail doesn't sell, there's no shares for them to buy. So that means there's no shares. They're already negative, they're already lacking in shares if retail does sell to itself, which it's not doing. They're just going to add to their position. So there's no shares. Let's take another look to see if we can get a share count. Okay, we know that metamaterials recently announced Q4 earnings, and along with that, they said that there's a Q&A that they're going to be taking from the Say platform, and this is what that Q&A looks like. So if we look at the Say platform, we see that under each question they have a vote and the number of shares represented by that vote. Okay, what does that mean? That means that at some point when you signed up for Say, you gave them your username and password to get the share count from your broker. Okay? Now, I'm not really into giving other companies my username and password and access to my brokerage account, so I can't say I would recommend that anyone do that. I don't know why people would do that, but in either case, the numbers are valid, I believe, because they actually come from a broker, right? So how does this work? A user writes, users can write a question or upvote somebody else's question, right? And that will add shares to the shares represented count. When you get 3 or more upvotes, then the share count is also displayed. So no one knows how much shares any one particular person has, right? It's just, it's hidden, right, at that point. But there's a red flag, right? I mean, are you really going to give personally, I'm not going to give my username and password to my brokerage account to some website that I don't know anything about. So that ain't happening for me. A bunch of people did. And I've heard that Say has been bought by Robinhood. I don't know that I trust Robinhood very much based upon the shenanigans that they've done in the last year. Who knows what they may do with your account and password? I don't know. In either case, if you did give your username and password, I would suggest that you change it. Not financial advice, not a financial advisor, but it's probably not a good idea to give your password and username for your brokerage account to anybody. Okay, just don't do that. So anyway, since the data is out there, I figured I might as well use the data, right? Okay. So all I did was I took the top 16 questions. I entered in the number of users and the number of shares that are represented by that. Then I divided the shares. I took the shares represented and I divided by the number of users, right? So I came up with a shares per user, okay, for the top 16 questions. Then I did some quick stats on that. I said, what's the min? What's the max? What's the median, which means, how many users have more than that, how many users have less than that, and what's the mean, right? So did some quick stats on that, and then I said, there's in general about 2,300 shares that are there per user. Each user for these questions has about 2,300 shares. Maybe on the low side, you got about 1,650, right? So let's see what happens. We know that there are 170,000 shareholders, as per George Palikaras and Ken Rice on an interview at CES. So there's 170,000 shareholders. Multiply that by 2,300 shares per shareholder, we get about 395 million shares that are represented. That's both synthetic plus the issued shares. That implies that the number of synthetic shares is 238 million shares, given that there's only about 157 million shares afloat. 238 million shares that are synthetic. That's 152% of the float. Strictly speaking, when I do that, it's kind of sketchy because it's not really mathematically correct. It's just a rough estimate. So, but it's not an unreasonable estimate for me to do that, right? So it's really not I'm showing you the math. It's not the best thing in the world to do, but it's not unreasonable, right? That's the way I look at it. So if we take the same stats for the median, there's also about 2,371 shares per user there. Works out to about 400 million shares. And that means that there's 245 million shares that are synthetic, or about 156% of the float. Now, finally, you do that with min stats. And if you do that with min stats, you get a number that's somewhere around... Ooh, hang on. Slight problem with the sound there. If you do that with min stats, you get you get a number that's about 123 million synthetic shares, right? So that means that that's 78% of the float. That's a huge number of synthetic shares. I'm sorry. That's just gigantic. That means the shorts are going to be totally holes when the prices go up, So what does this mean? This means retail owns the float, right? Shorts have shorted somewhere between, I I'm guessing that they shorted more. I'm guessing that they shorted between 180 to 200% of retail shares. Okay, maybe much more. Who knows? At minimum, you've got about 74% of retail shares have been shorted, right? So at minimum, okay. So as a retail shareholder, you can't be forced into selling your shares. But if the price of MMAT increases significantly, shorts could be forced to cover. Then they got to buy back shares, and those shares don't exist. So, that's yeah, I think they're screwed. So just some notes to myself. I wrote that the number of synthetics can be significantly worse than what's projected here with these numbers. These are not necessarily, the worst case for the shorts. There are much, much worse cases. There's about, I think Steve Plant said last week or so that there's about 93 million shares that are coming in from MMAX. They're going to be converted to MMAT, and that's going to represent a huge problem for shorts. So yeah, there's a lot worse that could happen to them as well. What about MMTLP, right? How many synthetics are there for that? Let's see. Well, I don't know, but we can try to figure it out. Let's say that, so we know that there's about 151% of the shares for MMAT, let's just say, are synthetics. Let's just say that they're shorts, right? If we take that number and we say that a similar percentage of shares for MMTLP have been shorted, right? Let's just say it's similar. That means that that's implying that there's 250 million synthetic shares of MMTLP. Now, this is sketchy math at the best, right? Because you can't really transfer the number of shorts from one group to another group. But, it's an idea. It's not saying that there is. It's just saying, what if? It's an idea. It could be way worse than this. Probably is, from what I heard. Okay. Could be way, way worse. Anyway, if it's just 151%, that implies 250 million shares of MMTLP that are synthetic. At $65 a dividend, that means that the payout by the shorts is something like $15.5 billion. $15.5 billion that they don't have, most likely. And the price of oil is projected to stay at, above $100 for even longer, for a long period this year. And if that's when this sale takes place, we get a really nice dividend that's above $65 even. Jeez, it's a perfect storm. Anyway, so what does this mean? Oil prices are high. They're going higher. We're getting close to March, right? And so we're just waiting for the dividend announcement from Metamaterials. They're doing their job. They're crossing the T's, dotting the I's, that whole thing, right? Making sure to do it the right way. There's at the very least, there's some insane short interest going on with Metamaterials. And on top of all of this, the SEC is starting to get more interested in Reg Show and in the shorts in general. So life is not good if you're short Metamaterials or Metamaterials Torchlight preferred shares. That's what I'm saying. This is some drone footage of the Founders B-19 well. This is an idea of some of the oil and gas assets that are going to be sold off or spun out or whatever. Yeah, things are not looking great if you're short. With that said, I'm just going to say that I'm not a financial advisor. This isn't financial advice. This information is intended for entertainment and educational purposes only. Good night. Goodbye.